The Mortgage Banking Association reports that refinancings in the U.S. are up 81% in the past year, or from a year ago. Now, in October 2024, they were up 90% from October 2023. That shows how sensitive homeowners are to changes in mortgage rates, particularly those that have mortgage rates over 7%. Now, let's look at current mortgage rates in the U.S. Average for 30-year fixed is 6.27%, and for 15-year fixed, it's 5.5%. If we look at mortgage rates over the long term, here's some data from the Federal Reserve. We can see in 2021, mortgage rates were around 3%. Then they spiked to over 7% in 2022, and now we're around 6%. But in reality, mortgage rates haven't changed that much in the past year. They're around 6%. Yet we're seeing these big spikes in refinancings. Now, should you refinance your mortgage if you have one of those 7% plus type mortgage rates? Well, it depends. The Federal Reserve Open Market Committee just cut its policy rate for the first time since December 2024. If inflation comes down, the U.S. economy continues to slow, they'll likely cut the policy rate again this year, but perhaps not. And so when we decide what to do, it's whether the numbers pan out. Now, as the policy rate comes down, we'll get lower mortgage rates, assuming the bond market doesn't freak out about the national debt. And so the U.S. fiscal situation puts upward pressure on mortgage rates, while we have the Federal Reserve cutting its policy rate, putting downward pressure. We have this tug of war. So it really depends, and it depends on whether the numbers make sense for you in terms of how long it would take to recover the cost from refinancing. So what do you think? Is now a time to refinance, or is it better to wait?